Hello, let's take a look at exercise 9-2. It's in chapter 9 on budgeting. The marketing department has submitted the following sales forecast, so it gives us budgeted unit sales for 4 quarters. The selling price of the company's product is $22 per unit. Management expects to collect 75% of sales in the quarter in which they are made, 20% in the following quarter, and 5% are expected to be uncollectible. The beginning balance of accounts receivable, all of which is expected to be collected in the first quarter, is $66,000. The company expects to start the first quarter with 3,200 units in finished goods inventory. Management desires an ending finished goods inventory in each quarter equal to 20% of the next quarter's budgeted sales, and the desired ending finished goods inventory for the fourth quarter is 3,400 units. Okay. Required. Number 1, prepare the company's sales budget and schedule of expected cash collections. Okay, so for the solution, so basically you have to do the sales budget first, because based on sales, how much they're planning on selling, that will determine how much cash we're expecting to receive. So the first thing we have to do is determine the sales. So we are told the units that they're planning on selling, and we're told the price of each unit, $22 per unit. So therefore, we just take the unit quantity, 16,000 for example, in the first quarter. They're going to sell for $22 each, which means planned sales for the first quarter, $352,000. So you do that for each quarter and then total them up for the year. And your schedule of expected cash collections. So in the first paragraph here, we're told that 75% of sales are planned or expected to be received in the quarter that the sale is made. So in the first quarter, whatever we sell, 75% of that, we're expecting to receive the money that quarter. 20% is to be received in the following quarter, so that gives us 95%, and 5% is uncollectible. So that's how we determine what our cash receipts are going to be. And then beginning balance of accounts receivable. So the balance at the beginning is expected to be received in the first quarter, that's $66,000. So now to do our schedule of expected cash collections. So we know that the $66,000 that's in accounts receivable is expected to be received in the first quarter. Plus, from this first quarter sales, 75% of that is going to be is expected to be received in that quarter. 20% up to $352,000 is expected to be received in the following quarter. And then the same thing in quarter 2. The $330,000 of expected sales, 75% of that, which is $247,500, is expected to be received that quarter. But 20% of the second quarter sales is expected to be received the following quarter. We do the same thing for the third quarter. And then in the fourth quarter, you'll see we only have the one number. So of that $330,000, 75% of that is expected to be received this quarter, which is $247,500. The other 20% is going to be expected to be received the following quarter, but that's not in this time period. That's the next year. So, for example, if we were going to do financial statements, that 20% that's expected to be received the following quarter would be on our statements as accounts receivable. But here we're not asked that, so just make sure you only include the portion that's to be expected in that quarter. So there we have our schedule of expected cash receipts. Then we're asked to prepare the company's production budget for the upcoming fiscal year. So information for our production budget is given in the second paragraph here. We expect, the company expects to start the first quarter with 3,200 units in finished goods inventory. They want an ending finished goods inventory each quarter equal to 20% of the next quarter's budgeted sales, and desired ending finished goods inventory for the fourth quarter is 3,400 units. So we go take a look. Again, we know what our budgeted unit sales, we were given that in the question. Then from what our sales are that quarter, then we also need to get our desired ending inventory. So our ending inventory was 20% of the next quarter's budgeted sales. So our next quarter's sales in quarter two, 15,000. So 20% of that is our desired ending inventory for this quarter. Same thing here. We take 20% of the 14,000, our next quarter's sales, which would be our this quarter's desired ending inventory. As for the fourth quarter, we don't know what the sales are, so we can't calculate it, but it does say the desired ending finished goods inventory for the fourth quarter is 3,400 units. Now, they could have also just told us what the first quarter of the following year, what the sales were expected to be, and we could have just worked it out, but here they actually give us the number. So we're given our unit sales, we're told what percentage our desired ending inventory is supposed to be, 20% of the following quarter's sales, which gives us the total units needed. Now we need this many units, but how many do we already have? So we are told that the company expects to start the first quarter with 3,200 units in finished goods inventory. So that's where we get the first one. So if we know what we need, we know what we already have, the rest we need to produce. So you take the needs less what you already have to get your required production. Moving on to the second quarter, again, we already discussed 15,000. We know we got the desired ending inventory was 20% of the following quarter's sales. So we know what we need. Our beginning inventory is what we had left at the end of the last period. So our ending inventory in this quarter is our beginning inventory in the next quarter. So we need 17,800 units. We're going to start the quarter with 3,000 units, so we need to produce 14,800 units, and so on. One thing I want to point out is if you look over here, so our budgeted unit sales, each quarter you add them to get the unit sales for the year. Ending inventory, though, is not just added. It's our desired ending inventory. So it's the ending inventory in the last quarter. That's what we want to end our year with, which is this 3,400. Excuse me. Total needs, again, if you add them across here, or you can take the 60,000, add your desired ending inventory, and you will get 63,400. Beginning inventory, again, it's not added across here. It's our beginning inventory that we started the period with. And then you take the units less your beginning inventory, and you'll get your required production. So again, make sure that desired ending inventory, so it's ending inventory is what you're ending off the period with. Your beginning inventory is what you started the period with. Don't add them.